for an end to this bearishness in Stellar Lumens, and we may be getting near that point right now. In our last update on Stellar, we had what looked like was a micro 1-2 setup, as we see pictured here. However, we broke down below our wave 1 origin, so we've invalidated that 1-2 so far, so I'm going to delete that. However, that's not all bad news, because our green pattern is still very much valid regardless of that. In this pattern, we were calling for this original wave, subwave 1, to still be valid, and this entire rally and correction to have been an expanded U wave flat. And so far, we don't have too much reason to not believe that. So as of now, our green pattern is still primary. However, there is support below. Our midsummer low sits at just about 19.9 cents, and that is still our major support. If that breaks, we're following the more bearish red pattern. And if we do follow that pattern, then I'm looking at as low as 7 cents that we could go to. There's no real clear way to make an estimate as to how low we can extend, which I'll show in the longer term picture in just a second. Now, if you would like to follow along with my charts, I'm going to have some links posted in the description below, so don't forget to check those out. In the short term, we could drop a little bit lower without jeopardizing this pattern. Again, the support does set at 19.9 cents, so we could retrace this almost all the way down there without invalidating the green pattern. If that happens, it makes it more likely that our green pattern is going to be a leading diagonal, or I'm sorry, in this case, an ending diagonal, because this would be the 5th wave. On the big picture, just to make more sense of this whole thing, we still have the green as primary, and this is the logarithmic chart, so it does count a bit differently from the linear chart. When we zoom up a little bit, you can see that we have our subwave 1, an A wave pullback, B wave bounce, and what we're calling the C wave. And it's very clear that we haven't yet made it back down to the origin of what we're calling the subwave 1. So by the book, this is still valid. And because of the depth of this correction, we're at just about the 76.4% retrace. It is best identified as an ending diagonal. It's ending because this would be potentially the 5th wave of a larger pattern, or it could be a leading diagonal if this is actually the first wave of a much larger bullish pattern. So it's too early to tell what exactly this is. Is this a final 5th wave, or is this a subwave 1? Either pattern, it would look exactly the same. There'd be no way to know until we see the subsequent correction. Right now, we're trying to get up off the floor. So let's not get too far ahead of ourselves. The red pattern calls for this whole correction having been an A wave, this bounce having been the B wave, with further downside follow through left to complete what I would be calling a larger wave 2. And this is kind of the pattern at work for a lot of cryptocurrencies. We've had a turn for the worse in Bitcoin and Ethereum. I've made a bunch of videos highlighting that. In those videos, we're seeing a huge crash setup forming in Bitcoin and Ethereum, and we're probably in the middle of a wave 2 bounce back up, so what we call a corrective bounce, and I would expect a pretty nasty crash after that, so I'm keeping everyone updated on that. I'm not seeing the same kind of setup in most altcoins. I've been updating on Bitcoin Cash, Ethereum Classic, EOS, a couple of other cryptocurrencies, Chainlink. They're not set up to crash the way Bitcoin and Ethereum are, so this looks deep, this looks terrible, but it's not as dire looking as what I'm seeing in those cryptos. And I've been getting a lot of comments in my comment sections about what we call the altcoin season. So I'm not too familiar with this phenomenon, but Elliott wave theory could be supporting that. We may see a divergence in which our altcoins take off while Bitcoin and Ethereum crash. So it's too early to tell. I'm just going by the charts here. And again, like I said, if we do follow the red pattern, we don't have that much downside left to go. Now, provided that we hold support and we are following the green pattern, I've modified the extensions just a little bit since we've dipped a little bit lower than we had before, but our 3rd wave in the diagonal would project to about 54 cents to about 64, 65 cents, right in that range. That's what this green box is. And our final top would project between 72 cents and 87 cents. However, there are some strong Fibonacci resistances overhead, so we could get pulled up to 97 cents. There's another strong fib closer to $1.40. So it could happen. And as I covered in our last video, Stellar Lumens does have a precedent of kind of backloading its rallies. So we may not see too much action right away. And then we might have a blow off later on towards the end of things. So we'll see how this holds together. So again, nothing particularly bearish right now. We are down about 3% today, but looks like we've already started recovering. Some of the cryptos have already turned positive. Got some altcoins here that, well, they're all in a small pullback today. So again, nothing obviously bearish. Bitcoin and Ethereum are bearish. I have adopted a much more bearish red pattern for those. So depending on how things go, we might have an inflection point. If those two get pulled down, we might have a big gravitational pull on the rest of the altcoins. So if you want to keep up on my updates, see if there's anything bearish on the horizon, don't forget to subscribe. And if you like my video, don't forget to give me a like. Until next time, thank you for watching and happy trading.